Hello and welcome. For home-based businesses, there are two areas that are often misunderstood when it comes to tax deductions. The tax implications of transportation and food costs can be confusing, but when properly classified, these business costs provide tax deduction opportunities. This presentation breaks down the basics of both topics when it comes to your taxes and explains how to deduct them. The information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information are not intended to create, and receipt does not constitute, an attorney-client or any other advisory relationship. Reproduction of this information and recording of this content, including the use of AI, are expressly prohibited. Only non-commercial uses of this work are permitted. Today we will talk about the types of transportation expenses that are tax deductible and the best methods to calculate the amount of your deduction, along with food and meal deductible expenses and how to calculate that deduction as well. As a business owner, it can be helpful to understand the tax implications of these business expenses in order to fully capitalize on the tax time opportunities presented. However, there are many factors that could affect your business's specific tax situation, so it is always good to seek advice from a professional tax preparer as needed. Many doulas use their own car or van to conduct business activities. This could be as simple as the personal car you also use to purchase supplies for your business. According to the IRS, transportation costs can be deducted from your taxes as they relate to the regular course of your business. They note some typical expenses may include traveling to clients and trips to buy business-related supplies. Since transportation costs must be business-related, the primary purpose of eligible trips must be for the business, even if there are also tangential personal benefits. For example, if you make your regular Costco run to buy bulk supplies for your doula work, but while you're there you purchase a jar of pickles for your family, that trip is deductible. On the other hand, if you're at the supermarket picking up your family's groceries for the week, and you add some supplies for your business to the list, the trip is not deductible because the primary purpose of that trip to the store was personal. Vehicle and transportation costs add up over time, so keeping accurate records and understanding the options for deduction is essential. There are two ways to deduct your transportation expenses on your taxes. The standard mileage rate provides a simple cost per mile, set by the IRS, that is used to calculate your deduction. The actual expense method uses the costs of your vehicle and travel to calculate your deduction. Regardless of the method you use, you need a simple log recording the number of miles you drove your car for business-related purposes. The log should include the date, the distance you traveled, where you went, and the purpose, business or personal. Be as specific as possible. If you use the standard mileage rate, be sure to check the IRS website for the most current rates. Keep in mind, when you use the standard mileage rate, you can still deduct parking fees and tolls accumulated as you are working, but parking tickets and other violation fees are not deductible. Unless you are using your vehicle very heavily for your business, the standard mileage rate is easy and fair. If you use your car a lot for your work, you may want to use the actual expense method. It requires more record keeping but could result in a larger deduction. With the actual expense method, you will collect receipts or other proof of payments for all expenses related to your car. The vehicle expense worksheet included below can help you collect the total amount of your actual vehicle expenses. If you have a dedicated work vehicle, all expenses will be business expenses. If you use your vehicle for work and personal expenses, using this method requires you to multiply the total of your actual expenses by the percentage of miles driven for work. To determine this, keep a mileage log and divide the miles driven for doula-related work by the total miles driven in the year. Then, multiply your total vehicle expenses by this percentage. Here's an example of using the actual expense method. A doula logged 3,000 miles for business-related purposes, including traveling to clients' homes, hospitals, and events. Over the year, she drove her car for both work and personal reasons, totaling 10,000 miles. Her actual car expenses for the year were $6,000. First, the doula will divide her work miles, 3,000, by her total miles, 10,000, to calculate 0.30 or 30%. Then she will multiply her total vehicle expenses of $6,000 by 30% to determine her business use of vehicle deduction, which would be $1,800. There are a couple of ways to report food expenses related to your business. The standard meal rate involves keeping track of meal types and numbers and multiplying those totals by a set amount, published annually by the federal government. This option is only available to home-based businesses. Using the actual expenses method, you keep track of all food expenses, including receipts. Here are the pros and cons of each option. For standard meal rate, pros include easier record keeping and deduction of non-reimbursed meals and snacks. However, you are still required to keep details of each eligible meal, including name, dates, and number and types of meals served. Actual expenses include all costs, but there is also greater scrutiny and recording burden, and is more time and resource intensive. The standard meal rate provides an optional, set rate for calculating meal-related deductions for doulas who provide food during their services. This rate is based on the Tier 1 rate under the Child and Adult Care Food Program, CACFP. Using this method, you can simplify your tax deduction process by applying the standard meal allowance rate for each meal or snack you provide. For example, if you supply meals or snacks to clients during postpartum support visits, you may calculate your deduction based on a minimum of 1 breakfast, 1 lunch, and 3 snacks per eligible client per day. This method streamlines record keeping while ensuring you receive fair deductions for your food-related expenses. For tax purposes, you use the rates in effect on January 1st of the tax year. So, for example, the rates for the 2022 tax year would be 2021 to 2022. For the 2023 tax year, they would be 2022 to 2023. Looking for more info? For more information about the New Jersey Doula Initiative, reach out to NJDoula at civstrat.com or go to njdoulabusinessresources.com. There, you'll find access to free resources to support your doula business. And be sure to visit the Civitas Strategies YouTube channel for more valuable resources to support you and your business.